Do you think that inflation has peaked?
So I think when we get the report this week, we are going to test highs or make a new high in headline inflation. But I think that, the underlying details, there's some areas that do continue to show some relief. But overall, the bottom line is that headline inflation is high, and that's what matters for the economy. That's what matters for households. And increasingly, that's what's mattering for the Fed. I think we're past the point of stripping out food and energy prices to show that underlying inflation may not be as high. It's high and it's painful, and the Fed is acknowledging that.
Yeah, I was out in Iowa recently talking about inflation, Ellen, and farmers were like, get ready because all the stuff that we grew with these sky-high fertilizer costs, most of it hasn't come to market yet. I mean, certain parts of inflation may not have yet peaked.
Yeah, and I think that the fertilizer story, the agriculture story in the U.S., food prices, this is something we've been following closely with a report out just yesterday, pointing out that food prices, disproportionately impact lower income households. It is a problem. And it's not just about supply chains for fertilizer and food. It's about weather. Remember, weather mattered most for crops, and it still matters most. We were already having a bad season leading into this for weather before all of these issues hit.
Yeah.
And there are things that the administration is trying to do in order to alleviate that, but none of them affect the near-term costs to families for food.
Yeah, I mean, God, if we get a bad hurricane, by the way, that shuts down some refining capacity in the Gulf of Mexico, with the SPR being sold off largely, there's still some in there, but there's a lot of things that are left to hope and, whatever. Next week, it's pretty much all but guaranteed, Ellen, that the Fed's going to raise rates, probably a 0.5 percentage point the next meeting as well. But quantitative tightening doesn't feel to me like it's getting enough attention. What's your take on some of the non-rate things that the Fed is doing and what they mean?
Yeah, so I think the quantitative tightening, the fact that the Fed is shrinking its balance sheet, you're right, doesn't get a lot of attention. Now, maybe right now, because so little is running off, we've really started it at a trickle. Maybe that's why. And we hit those maximum caps with maximum runoff in September. And so maybe we only start to see the effect of those flows in September. I think the uneasiness I have with the balance sheet is that it seems well priced into rates markets, but it's not well anticipated, the effects of it on equities and on corporate credit. That's coming from our strategists of those asset classes. Those asset classes tend to not be impacted until the flows occur. And we've only just started to see that balance sheet run off. So that's going to provide some additional tightening. I don't know how much it will factor into what the Fed does beyond the July meeting, but it is going to provide additional tightening.
Yeah, and all these things just layer on. I was speaking with a colleague at CNBC yesterday in the office, and she's like, yeah, well, I was moaning and groaning about airfares, so I'm flying again. And she said, yeah, we went to Florida a couple months ago, and I'm done. We're done traveling for the year because basically we broke the bank on that trip. You wonder how much of that is actually going through, how much of this sort of spending spree that we have seen, Ellen, and we know, by the way, about 21% of it is on credit cards. How long? I know we feel good, but how long can that continue until people just back off?
Well, I think, look, we went through a long period of pent-up demand for good spending finally being satisfied. Now we've opened the season for pent-up demand for services to be satisfied. And you're right? We'll still take that trip, but we're going to pay 3 times as much for it. And there's a lot of price tolerance right now for households. It starts at the lowest income levels, Brian. So we're already seeing demand destruction for the lowest income levels who are dealing disproportionately with food, energy, rents. With the Fed raising interest rates, you mentioned credit cards. In the near term, they're the ones that carry variable debt, which is impacted by higher interest rates. And so they are the ones that have pulled back on the spending. But for a time, the upper income groups continue to spend, and the top income quintile represents 40% of all consumer spending. So unless the wealthy stop spending, or until the wealthy stop spending, aggregate consumer spending looks okay.